2025 earnings conference call. On the call with us today are Vicki Hollub, President and Chief Executive Officer, Sunil Matthew, Senior Vice President and Chief Financial Officer, Richard Jackson, Senior Vice President and Chief Operating Officer, and Ken Dillon, Senior Vice President and President, International Oil and Gas Operations. This afternoon, we will refer to slides available on the investor section of our website. The presentation includes a cautionary statement on slide 2 regarding forward-looking statements that will be made on the call this afternoon. We'll also reference a few non-GAAP financial measures today. Reconciliations to the nearest corresponding GAAP measure can be found in the schedules to our earnings release and on our website. I'll now turn the call over to Vicki.
Thank you, Jordan, and good afternoon, everyone. 2025 was an exceptional year for Oxy, made possible by the focus, discipline, and commitment of our people. Our teams worked safely, executed consistently, and delivered outstanding operational performance, all while driving meaningful cost reductions and efficiency improvements and increasing our financial flexibility. We took decisive actions to strengthen the company and position Oxy for long-term value creation. The sale of OxyChem, made possible by the quality of our portfolio, was a deliberate step to strengthen our balance sheet and enabled us to deliver greater value from our high-return oil and gas assets. As a result, the portfolio we have today is the strongest Oxy's ever had. Built around high-margin, lower-decline, and long-lasting conventional assets, we developed a world-class unconventional portfolio and achieved the technical excellence to maximize and expand its value. Now, with our operational excellence and our differentiated enhanced oil recovery expertise, we are perfectly positioned to drive sustainable free cash flow growth and deliver long-term value to our shareholders for decades to come. This afternoon, I will walk through our 2025 financial and operational performance, the actions we took to strengthen Oxy, and our priorities and capital plans for 2026. Richard will then cover our operations in more detail, and Sunil will review our fourth quarter results and outlook for the year ahead. Starting with our financial performance, 2025 demonstrated the resilience of our business. Even with oil prices down around 14% from 2024, we generated $4.3 billion in free cash flow before working capital. On a normalized basis, and excluding OxyChem, we increased cash flow from operations by 27% year over year. This improvement came from exceptional execution in multiple areas, including reduced operating costs, increased capital efficiency, and strong production performance. Debt reduction continued to remain a top priority in 2025. We repaid $4 billion in debt from multiple sources, and with the completion of OxyChem's sale earlier this year, our principal debt now stands at $15 billion, about $3 billion lower than before the Crown Rock acquisition. Just this morning, we announced a tender offer that is expected to further reduce principal debt to $14.3 billion, reaching that target we set when we announced the OxyChem transaction.
Hey, Holly, will you give me that little short?
Disciplined capital allocation and a sustained focus on strengthening the balance sheet.
No, it's a different one.
It gives us the flexibility to invest in our best opportunities and continue delivering value to our shareholders. Now I'll discuss our operational achievements.
It's probably in that bag over there.
Operational execution was a clear differentiator for us in 2025. We set a new annual production record of 1.4 million barrels of oil equivalent per day, exceeding the high end of our guidance, while spending $300 million less in oil and gas capital than originally planned. We reduced annual operating expenses by $275 million and achieved our lowest lease operating expense per barrel of oil equivalent since 2021. Reserves and replacement remains critical to the sustainability of our business. Every year we strive to add at least as many reserves as we produce. This is getting tougher across the industry, but once again, our teams delivered. In 2025, we achieved a 107% organic reserves replacement ratio and a 98% all-in reserves replacement ratio at a finding and development cost below our DD&A rate. Including the 2.5 billion barrels of resource we shared last quarter, Our total resource base now stands at 16.5 billion barrels of oil equivalent, providing more than 30 years of low-cost opportunity. Importantly, 84% of our total resource base breaks even below $50 per barrel. Our leadership in enhanced oil recovery and advanced recovery techniques continues to extend resource life and improve capital efficiency.
Boring.
Midstream also delivered strong results, with adjusted pre-tax income surpassing the midpoint of guidance by more than $500 million,
Stop. Hold on.
driven by gas marketing optimization in the Permian and higher sulfur prices at Alhosa.
Give it. Hold on.
More importantly, our employees achieved record safety performance across our global operations in 2025. In the fourth quarter, we launched our Remote Operations Command Center in the Gulf of America, which complements our Rockies and Permian Remote Operations Command Centers.
She said Gulf of
These
America,
utilize
chat.
advanced AI and remote monitoring and have further enhanced our safety, reliability, and operational efficiency.
I wanted to test this.
In 2025, our strategic actions improved our balance sheet and showcased our team's innovation and operational expertise. With the sale of OxyChem, our 10-year journey to build the best and most diverse oil and gas portfolio
I'm just listening
is complete,
to
yielding a larger, higher quality resource
earning
base,
report.
now at 16.5 billion BOE.
There's an earning report with
an increasing
Occidental Petroleum Company.
BOE per day in 2015 to 1.43 million barrels of oil equivalent per day in this year. U.S. assets now provide 83% of our production compared to 50% in 2015, while our international assets remain high quality and high performing.
You guys want to go outside?
Potential.
I'll take you outside, chat.
Our mix of conventional and unconventional assets provides a complementary balance that offers investment flexibility.
Chat, let's go outside. Let's go mob.
Downside protection through the cycles. We no longer require transformative acquisitions. Instead, our teams are focused on what they do best, and that is execution, including cost reduction, capital efficiency, and well performance, resulting in higher production, better margins, and greater financial flexibility. I'm confident that our teams will continue to innovate in all these areas into the future. While we are pleased with this pivotal achievement, we are not yet satisfied. There's still more work to be done.
Downstairs.
So looking ahead, our priorities for 2026 will build on the progress we made last year. First, we plan to maintain our production base through safe, reliable operations, because safety and operational excellence are foundational to everything we do. Second, delivering a sustainable, including the 8% increase to our quarterly dividend announced yesterday. Third, we will continue to strengthen our financial position and remain opportunistic in terms of share repurchases and further net debt reduction. Our value proposition is rooted in investing in high return oil and gas projects that generate strong cash flows today, while advancing mid-cycle projects to We're also progressing integrated technologies in CO2, power, and midstream to drive resource recovery. And also online this year is an important step in the strategy. 26 from a position of strength. We expect capital spending to range from 5.5 2025, excluding OxyChem. This reflects a leaner, more efficient Oxy and continued capital discipline. Even with lower spend, we expect production to average approximately 1.45 million barrels of oil equivalent per day. Approximately 70% of our oil and gas capital will be directed to our U.S. onshore portfolio, providing flexibility to respond to commodity price improvements while maximizing near-term cash flow. I'll now turn the call over to Richard to discuss operations in more detail.
There you go.
Okay, thank you, Vicki. 2025 was a standout year for Oxy, and I'm proud to show the progress we've made across our operations. Last year, our focus on cost efficiency and well performance continued to deliver positive results. As Vicki noted, our teams delivered record annual production of 1.434 million BOE per day production, while reducing total spending by $575 million, including a 7% beat in domestic operating expenses.
Whoa, chat.
In U.S. onshore, our new well capital costs were down 15% compared to 2024, with Permian unconventional costs down 16% and the Rockies down 13%.
These new well cost improvements are part of our ongoing track
My
record
family
of oil
car.
and gas cost efficiencies. Since 2023, we've achieved approximately $2 billion in annual oil and gas cost savings across our capital and operating expense categories. At the same time, last year across all U.S. onshore basins, our new wells performed more than 10% better than the industry, measured on a 6-month cumulative oil per foot basis. We also achieved record production from Al Hosn and record uptime production delivery to our production beat. I want to recognize our teams continue to center on 3 key focus areas: extending cost base, further driving cost efficiency, and generating resilient free cash flow at any price. Last quarter, we highlighted the significant resource opportunities ahead of us, including our 16.5 billion BOE, 30-plus years of low-cost development runway. This included our advanced recovery opportunities like unconventional EOR that position Oxy for the future. Today, I want to expand on our cost efficiency progress, which is central to our 2026 plan. The significant cost efficiencies and strong well performance we achieved in our oil and gas operations positioned us to deliver another $500 million.
Oh, hell yeah. Good job, bro.
In 2026, with $300 million from capital and $200 million from operating and transportation costs. This includes about 7% lower well costs, 5% less facility costs, and a 4% reduction in domestic operating. We plan to invest in key mid-cycle projects, including Gulf of America waterflood projects and unconventional EOR, where we've increased capital by $200 million from 2025. We view mid-cycle projects as an important part of our strategy to improve and extend resource our sustaining capital. In Goa, we're beginning our Horn Mountain waterflood project, which has potential to provide significant incremental recovery, with initial uplift to begin in late 2027. We believe our pipeline of Goa waterflood projects, combined with our ongoing focus on production reliability, can meaningfully lower our base decline rate and operating expenses. Importantly, our agile operations and 2026 plans provide flexibility to deliver cash flow even in a lower oil price environment. Continue to adjust spend and activity across capital and operating expenses while delivering mid-cycle investments as needed to preserve near-term cash flow and position Oxy for reinvestment only when market fundamentals are clear. In closing, our operational strength and financial progress in 2025 has positioned us for a strong year in 2026. We've proven that our execution, relentless cost focus, and operational agility can deliver outstanding results even in a dynamic market. Our teams have set new benchmarks in safety, efficiency, and well performance, and we're carrying that momentum into 2026. I'm confident that by maintaining our focus on improving resources and cost efficiency, we will continue to deliver.
What are you doing over here?
And enable a stronger, more resilient Oxy that will create lasting value. Thank you.
Oh, you're on TV.
No.
Thank you, Richard.
I look like shit
In the
or
fourth quarter, we delivered strong operational and financial results. We generated an adjusted profit of 31 cents per diluted share.
I can't find my
and
funnel.
a reported loss of
Oh
7 cents
my
per
God.
diluted share.
Why don't we just drink out of either bottle?
Because this one's too big, I can't.
Related to the sale of
Oh
Oxychem.
my God.
Our sustained focus on cost efficiencies and operational improvements enabled us to generate
You need to listen to my brother.
$1 billion in free cash flow despite lower realized oil prices. As Vicky and Richard shared, we had an excellent quarter operationally and strengthened our financial position. Production exceeded the midpoint of guidance by 21,000 BOE per day, driven by strong U.S. onshore performance. We also achieved our lowest quarterly domestic operating expense since 2021 at $7.77 per BOE. Momentum across our oil and gas portfolio is accelerating.